Welcome back, I'm Nick, and today we are diving into the reality of your financial future. Imagine waking up on your 40th birthday and facing two very different versions of yourself. In the first version, you are staring at a stack of bills with your heart racing. Every single time the phone rings, a cold wave of anxiety washes over your body. You feel trapped in a cycle of credit score servitude, working just to pay for yesterday. Your monthly income is being drained by vampire debt, leaving you with nothing for yourself. This path is like walking through a thick swamp where every step feels heavier than the last. Now, look at the second version of yourself waking up with a profound sense of peace. You realize you never have to work another day in your life if you don't want. This version of you has mastered coast fire and achieved total control over your schedule. You have avoided the trap of lifestyle creep that keeps so many others running in place. Instead, you have reached halftime with the confidence of someone who has already won the game. You are no longer a passenger. You are the architect of your own personal financial kingdom. What does your morning look like 10 years from now when you finally reach this milestone? Is your current path leading you toward a restrictive cage or an expansive financial kingdom? You need to decide today which version of that future self you are going to become. To get there, you must understand the power of career capital and the 70-40 rule. Success is not about luck or a sudden windfall that changes your bank account overnight. The difference between these two people is a series of 9 specific financial decisions. Let's break down these 9 decisions so you can start building your own path to freedom. But why is age 40 considered the magic number for your financial health and future? Statistically, hitting 40 means you are standing at the exact mathematical midpoint of your life. With the average life expectancy at 80 years, this milestone marks the ultimate pivot point. Think of your journey as an 80-minute game where the first half has just ended. In professional sports, halftime is the critical moment where the game is either won or lost. It is the time when coaches re-evaluate their strategy to ensure a victory in the end. Your life works the same way, requiring a hard look at the scoreboard before continuing. If your life was that 80-minute game, are you currently winning as you reach the half? Many people allow lifestyle creep to quietly erode their progress during these first 4 decades. Others find themselves trapped in credit score servitude, working only to pay off past mistakes. This is the moment to identify any vampire debt that is silently draining your monthly cash flow. Reaching 40 is about more than just a birthday. It is about your remaining career capital. You must decide if you are ready to pivot toward the security of coast fire. Are you prepared to apply the 70-40 rule to ensure your second half is successful? The clock is ticking, and the decisions you make right now will define your final score. Do not let the momentum of your youth fade into a series of missed financial opportunities. This transition period requires an honest assessment of where your money is actually going today. Are you ready to step back onto the field for the second half of the show? The strategy you choose now determines if you retire in comfort or struggle through your 60s. Let us look closer at why this halftime adjustment is the most important move you will make. Goal number 1 is about mastering the space between your ears by defining your ideal lifestyle. Most people believe a bigger house or faster car will make them happy for a lifetime. But the biological reality is far more punishing than your bank account realizes at first glance. Do you remember the sheer adrenaline high of your very last major car purchase? How long did that genuine joy actually last before the shine began to fade away? Science shows the human brain adapts to a new normal within approximately 3 short months. After 90 days, that luxury upgrade becomes just another standard part of your daily routine. This mental reset is the silent engine behind a phenomenon known as lifestyle creep. Lifestyle creep is like a treadmill that speeds up every single time you take a step. As your income grows, your standard of living rises until you are running just to stay. Every pay raise is swallowed by new bills, leaving your actual net worth completely stagnant. While the happiness boost is fleeting, the increase in your monthly expenses becomes dangerously permanent. We call these permanent costs vampire debt because they slowly suck the life from your future. You are essentially trading your long-term freedom for a temporary dopamine hit that never lasts. Without a clear definition of enough, you will find yourself trapped in credit score servitude. To reach coast fire, you must learn to distinguish between genuine needs and social pressure. Your career capital is wasted if every dollar earned is immediately spent on a status symbol. Use the 70-40 rule to ensure your lifestyle remains below your rapidly expanding means. Mastering your halftime adjustment means recognizing that more stuff rarely equals more lasting peace. If you do not control the creep will eventually control your entire retirement. Now that you know the danger of lifestyle creep, it is time to audit your recent past. Pull up your bank statements from exactly 90 days ago to begin this essential halftime review. Look closely at every purchase because your brain has already started rewriting your financial history. Research reveals that the human brain adapts to lifestyle upgrades in approximately 3 months or less. What felt like a luxury 90 days ago has likely become your psychological new normal today. This adaptation is the silent engine that drives lifestyle creep deep into your monthly budget. Think back to that excitement you felt when you first upgraded your daily coffee or car. Does that same purchase still spark genuine joy, or is it just another expected recurring expense? While lifestyle creep causes expenses to increase permanently, the initial happiness boosts are only temporary. You are likely paying a permanent price for a feeling that faded away many months ago. This cycle creates vampire debt, slowly draining your wealth without providing any lasting satisfaction or value. To fight back, you must identify which expenses have morphed from treats into basic requirements. Take a highlighter and mark every recurring cost that no longer moves the needle on happiness. Every dollar you reclaim from these stale habits brings you closer to achieving coast fire status. Do not let credit score servitude dictate your life by financing a lifestyle you do not enjoy. Use this 90-day window to distinguish between true fulfillment and mindless, expensive habituation. Your career capital is too valuable to waste on upgrades that your brain now takes for granted. Remember the 70-40th rule by ensuring your spending reflects your future goals, not just past impulses. If you can prune these invisible costs now, you secure your freedom before the halftime whistle blows. This 90-day audit is your first step toward mastering the space between your very own ears. Challenge yourself to cut just one new normal expense today and watch your savings rate explode. Constant vigilance against these temporary highs is the only way to ensure a stable financial future. Reclaim your budget by recognizing that your brain is hardwired to keep wanting more for less. Breaking this cycle is the most powerful move you can make before you reach age 40. True wealth is built by finding contentment in what you already own, rather than chasing ghosts. Analyze those old receipts today and decide which version of your future self you want to fund. Now we need to talk about the dangerous financial vampires currently draining your hard-earned bank account. Carrying $20,000 in credit card debt makes you more than a borrower. It makes you a prisoner. This high-interest debt is like a lit backpack you are trying to wear during a grueling marathon. Your second major financial milestone is reaching age 40 with zero debt except for a home mortgage. Achieving this freedom requires you to stop feeding the monsters of high-interest credit score servitude today. Imagine carrying a $20,000 balance at an 18% interest rate for decades on end. If you only pay the minimum amount required, you are signing up for a 30-year financial sentence. Is that vacation you took back in 2018 really worth paying for until the year 2048? Over those 30 long years, you will end up paying over $40,000 in interest alone. You are literally handing the bank double the original amount borrowed while receiving absolutely nothing in return. This is the true definition of vampire debt, slowly sucking the life out of your future wealth. As you approach the halftime of your life, these interest payments become an anchor on your progress. Every dollar lost to old interest is a dollar that cannot fund your eventual coast fire goals. You cannot build a stable financial house on a foundation made of high-interest consumer credit cards. It is time to audit your balances and create an aggressive plan to eliminate these liabilities forever. Remember that lifestyle creep often disguises itself as easy monthly payments that never seem to go away. Your career capital should be building your empire, not paying for meals you ate 10 years ago. The math is brutal and unforgiving, turning a small luxury into a lifelong burden of crushing debt. Stop working for the banks and start making your money work for the life you deserve. Your future self will thank you for the sacrifices you make today to achieve total financial freedom. Being debt-free by age 40 is not just a suggestion. It is a fundamental survival requirement. Break free from the chains of interest now so you can finally start funding your own future. Once you have finally killed off your vampire debt, you must learn to master the credit score. Think of an elite credit score as a VIP pass that grants you the ultimate discount on life. Most people believe an average score is fine, but they remain trapped in credit score servitude. Your third major financial goal is to achieve an elite score of 800 or higher before 40. This isn't just about pride. It is about reclaiming massive amounts of wealth from the big banks. Consider the staggering math behind a typical $500,000 mortgage for your next family home. One single percentage point on your interest rate might sound small, but the financial impact is massive. The difference between a 3% and a 4% rate is approximately $100,000. That is 6 figures of your hard-earned money vanishing into interest payments over the life of the loan. Would you really choose to work 2 extra years just to pay a higher interest rate to banks? Reaching the halftime of your life with an 800 score provides you with massive leverage for future growth. This score acts like a financial shield, protecting your wealth from being drained by unnecessary borrowing costs. Imagine what you could do with an extra $100,000 in your personal investment portfolio instead. You could accelerate your journey toward Coast Fire or invest deeper into your own valuable career capital. Every point you gain on that score is a direct step toward escaping the trap of lifestyle creep. Do not let high interest rates become the next invisible predator eating away at your long-term savings. Mastering the credit game allows you to keep more of your income under the 70/40th rule framework. This elite status ensures you always get the friends and family discount on every major life purchase. Start treating your credit score like a vital asset that requires careful cultivation and constant protection today. That 800 score isn't just a number. It is effectively a 6-figure coupon for your financial future. Imagine walking through life with a silent weight dragging behind every single financial move you make. This invisible burden is not just a number on a screen. It is a very real tax. Falling short of that magic 800 mark before 40 keeps you trapped in a cycle of servitude. We call this credit score servitude, where your hard-earned money slowly leaks into a bank's pockets. Let us peel back the curtain and see exactly how much this lack of mastery costs you. To understand the scale of this loss, we need to look at a typical home purchase scenario. Picture your dream house secured with a standard $500,000 mortgage over 30 long years. Most people think a single percentage point difference in their interest rate is just a minor detail. In reality, that tiny gap between a 3% and 4% rate creates a massive rift. While you are working 40 hours a week, your interest rate is quietly working against your future. That 1% difference might seem small today, but it compounds into a staggering 6-figure penalty. Over the life of that loan, you will pay approximately $100,000 in extra interest. Think about that number for a moment. $100,000 of your wealth simply vanishes forever. This is the literal price you pay for not reaching that 800 credit score goal early. That money could have funded your children's college education or accelerated your journey toward Coast Fire. Instead, it serves as a mandatory donation to the banking system because your score was too low. This is why hitting that 800 credit score before age 40 is a non-negotiable financial target. Every point you gain is a step toward breaking the chains of this expensive credit score servitude. You are essentially buying back your future freedom by proving your financial reliability to the world. Stop letting that $100,000 coupon expire and start claiming the life you actually deserve today. Stop letting your future expire and start building the foundation that protects your hard-earned progress today. But what happens when the car breaks down or the roof suddenly starts leaking mid-winter? Life does not care about your plans. It only cares if you have cash to handle chaos. When was the last time a major emergency did not end up costing you a significant amount? Without a safety net, one bad day can send you spiraling back into dreaded vampire debt. We need a barrier to keep unexpected life events from derailing your long-term journey toward halftime. This brings us to our 4th critical goal, establishing a dedicated emergency fund in liquid cash. Think of this fund as the essential bumpers in a bowling lane that keep you safe. These financial bumpers ensure your ball never lands in the gutter when life throws a curveball. How much is your peace of mind actually worth when you are trying to sleep at night? The standard rule of thumb is to have 3 to 6 months of expenses tucked away. This money must remain liquid so you can access it the moment a crisis actually strikes. It is not an investment meant to grow. It is a vital insurance policy for your sanity. Having this cash prevents you from returning to the chains of credit score servitude during hard times. 3 to 6 months of expenses provides the breathing room you need to stay the course. This liquid buffer allows you to face job losses or medical bills without feeling any immediate panic. By securing this cash now, you protect your future self from the stress of financial instability. This is the psychological foundation that allows for the calculated risk-taking required for your next goals. Once your emergency fund is locked in, you can finally move forward with true financial confidence. This is not a traditional investment. It is your ultimate peace of mind insurance for the future. Wealth isn't just about what's in the bank. It's about the value living inside your head. Your 20s were for finding yourself, but your 30s are for making yourself absolutely irreplaceable. If you left your job tomorrow, would your current employer struggle to replace your unique contributions? Are you a generic commodity or a specialist that people are desperate to hire for their teams? With vampire debt and credit score servitude behind you, you can finally focus on your true worth. As you approach the halftime of your life, building career capital becomes your most vital financial objective. The sixth financial goal focuses on building your career capital before you reach the age of 40. Career capital represents the specific combination of skills and relationships that define your professional worth. Think of this capital as a powerful moat protecting your personal finances from any market volatility. During your early career, you likely explored many paths to find where you truly belong today. Now is the time to transition from broad exploration to deep, specialized expertise in your chosen field. True wealth is built by leveraging this specific expertise to generate massive value for the marketplace. You must identify the high-value skills that set you apart from every other professional around you. These specialized skills are the foundation of your career capital and the primary driver of income. Relationships are the second pillar of this capital, connecting you to opportunities others will never find. Building a network of high-level peers creates a safety net that no insurance policy can match. Expertise is the final component, representing the deep knowledge you have mastered over your long career. When you combine skills, relationships, and expertise, you become a force the market cannot easily ignore. You are building this capital now so you can leverage it for maximum financial impact later. Your 30s are the critical window to solidify your position as an authority in your chosen industry. While others chase quick wins, you are playing the long game by investing in your professional value. Growing your capital allows your income to outpace lifestyle creep as you advance toward your goals. Every skill you master and every relationship you build adds another brick to your financial fortress. Career capital is the only asset that the market can never truly take away from you. Mastering this goal sets the stage for the next phase of your exciting financial journey. Becoming truly irreplaceable is the best hedge against any future economic uncertainty you might face. The greatest business asset you will ever own isn't a stock or a house, it's just your own body. None of these goals matter if you're not around or fit enough to enjoy the wealth you've built. Your body is the engine of your financial car. Without oil changes, the car eventually stops moving. After building career capital, you must protect the physical machine that generates all your future income. The seventh financial goal focuses on developing a fitness routine specifically tailored for your current age. What is the point of a massive portfolio if you lack the energy to walk upstairs? Reaching your halftime requires a pivot from vanity-driven gym sessions to sustainable, long-term functional health. Smart fitness for those around age 35 prioritizes injury prevention over lifting the heaviest possible weights. You need a body that supports sustainable energy rather than one that crashes after every workout. Long-term functionality becomes the new metric for success as you move closer toward your 40th birthday. This isn't about looking like a model. It's about maintaining the engine that powers your career. To maintain this machine, you must focus on mobility and strength to handle life's daily physical demands. Regular strength training ensures your bones and muscles stay resilient as you navigate your busy professional life. Mobility work keeps your joints fluid, preventing the stiffness that often comes from long hours of work. Ask yourself honestly, is your current daily diet providing you with fuel or creating unnecessary friction? Maintaining a healthy routine includes cutting out most processed foods to sustain your focus and daily drive. Swapping sugary snacks for whole foods ensures your brain has the steady power needed for complex decisions. Think of these habits as a way to ensure you reach coast fire with your health intact. Avoiding injury today prevents the physical debt that could bankrupt your health during your peak earning years. Staying fit allows you to dodge the hidden tax of medical bills and lost productivity later on. If you ignore these habits now, you are essentially stealing vitality from your future self's retirement. Your 30s represent a biological halftime where sustainable habits determine your quality of life at 60. Functional fitness ensures you can actually use the wealth you've spent so many years working to accumulate. You are building a fortress of health to protect the financial progress you have fought to achieve. Invest in the machine now, or the machine will inevitably break long before you reach the finish line. If you have a family, relying on hope is simply not a viable financial plan for your future. This is the unsexy part of the list, but it is the most critical for your lasting legacy. Could your family keep their home if you did not come back through the front door tomorrow afternoon? Think of estate planning as the fire extinguisher of your financial life that you hope to never use. Goal number 8 requires you to complete your estate planning and life insurance before reaching age 40. You have spent years fighting vampire debt, so do not let your progress vanish in a single instant. Protecting your income-generating machine means preparing for the unthinkable with the right kind of insurance coverage. Term life insurance provides a death benefit if the policyholder passes away during a specific time period. It is a simple, cost-effective way to ensure your loved ones are cared for during their most vulnerable years. A solid rule of thumb is to secure coverage equal to 10 to 12 times your annual expenses. Consider a family that spends $60,000 annually to maintain their current lifestyle and home. Based on standard rules, that family would require between $600,000 and $720,000. Remember that as lifestyle creep increases your expenses, your insurance needs will also naturally grow alongside them. Beyond just the money, you must also determine who will manage your affairs when you cannot do so. A basic estate plan typically includes a formal will to distribute your assets and your final wishes. You also need power of attorney documents to designate who will make critical medical and financial decisions. Who is making your medical decisions if you are suddenly unable to speak for yourself in a crisis? Reaching the halftime of your life means taking responsibility for the people who depend on your hard work. This is the ultimate safety net that keeps your family from falling into financial ruin after you are gone. Do not let the complexity of legal documents stop you from securing the future of those you love most. Procrastination is a luxury you can no longer afford as you approach the second half of your career. There is a profound sense of peace that comes from knowing your family is protected no matter what happens. Sit down this weekend and start the process of building your final financial firewall against the unknown. Get these tasks done once, and you will never have to worry about this heavy burden ever again. Protecting your family means looking upstream to the generation that once looked after you. Many people ignore this step because discussing money with parents often feels awkward or intrusive. Have you asked your parents the provocative 70/40ths question yet to ensure their future security? This specific timing helps you avoid the chaos of reacting to a sudden medical emergency. The 70/40ths rule suggests starting this vital talk when parents hit 70 or you hit 40. Reaching 40 is your halftime, making it the perfect moment to evaluate your family's broader landscape. This conversation represents the official passing of the baton in your family's long financial relay race. As your 9th major goal, you must bridge the gap between their legacy and your future. Speaking with aging parents about money is not about control, but about providing ultimate peace of mind. Do you actually know where your parents keep their most important financial and legal documents? Are you prepared for their halftime and the unique challenges that come with aging gracefully? Without a clear plan, your parents' hard-earned assets could fall victim to various financial vampires. Clarity now prevents a massive crisis later when emotions are high and time is running out. You have spent years fighting lifestyle creep and building your own career capital for stability. Now you must protect that progress by ensuring your parents have a solid financial firewall too. Approaching this topic with empathy ensures your parents feel supported rather than scrutinized or judged. This discussion is the final layer of protection for the life you have worked so hard for. Ignoring these questions can lead to a heavy burden that disrupts your own path to coast fire. Open communication ensures that everyone stays on the same page before a life-altering event occurs. Take the lead today because clarity in the present prevents a devastating financial crisis tomorrow. You might be thinking, Nick, I make decent money. I should be totally fine for the future. But clarity in the present reveals a harsh truth about what happens without a real strategy. You can make $70,000 a year and still find yourself completely broke every month. In fact, most people in that exact income bracket are struggling more than you might imagine. Why does decent money never feel like enough when the bills start piling up at halftime? The script defines making $60,000 or $70,000 a year as earning decent money. Yet, without a plan, that salary becomes a bucket with massive holes in the very bottom. Making a high income without a strategy is just a faster way to go absolutely nowhere. You work harder to earn more, but the money vanishes before it ever hits your savings. This is where lifestyle creep begins to quietly sabotage your dreams of reaching financial freedom early. Every raise you get is immediately swallowed by new expenses you never truly needed to survive. Suddenly, that $70,000 salary feels exactly like the $40,000 you made years ago. You find yourself trapped in a cycle of debt and financial panic that feels impossible to escape. Vampire debt starts draining your hard-earned bank account while you sleep, one interest payment at a time. You are working tirelessly for your money, rather than making your money work hard for you. Without career capital to leverage, you remain stuck on a treadmill that only seems to go faster. The 70-40th rule reminds us that our family's future depends on the choices we make today. Are you building a fortress or just feeding a system designed to keep you in servitude? Credit score servitude is the silent weight dragging behind every single financial move you attempt to make. It turns a decent $60,000 income into a struggle for basic survival and constant stress. Even with a good salary, you are still vulnerable to the unexpected storms of middle age. Panicking about retirement at age 40 is a direct result of living without a clear financial map. Coast Fire becomes a distant dream when you are busy financing a lifestyle you cannot actually afford. You must decide if you want to look rich now or actually be wealthy later in life. A decent salary without a strategy is simply a recipe for long-term disaster and wasted potential. We have to stop pouring water into a leaky bucket and start sealing the cracks permanently. Your income is your most powerful tool, but only if you know exactly how to use it. Reaching $60,000 a year should be a milestone, not the end of your financial growth. Break the cycle of debt by defining what your ideal lifestyle really looks like right now. High income provides the fuel, but strategy is the engine that actually drives you toward your goals. It is time to stop the panic and start building the foundation for your 40-year-old self. Remember, a decent salary without a strategy is just a faster way to go absolutely nowhere. You might feel like that raise to $60,000 or $70,000 finally solved your financial problems. But surprisingly, many people at this level feel more broke than they did at $40,000. It is a financial optical illusion where your bank account grows, but your actual freedom starts shrinking. We call this earning decent money, yet it often acts as a trap for the unwary professional. This happens when you allow your spending to expand at the exact same rate as your income. This phenomenon is known as lifestyle creep, and it is the silent killer of your future wealth. Every time you get a promotion, you find a new way to spend those extra hard-earned dollars. The luxury car payment or premium apartment quickly eats through your newfound financial breathing room. Suddenly, you are working harder than ever just to maintain a standard of living you never needed. Without a clear strategy, that higher salary just feeds a more expensive version of your old life. Many high earners are unknowingly trapped in a dangerous cycle of what we call credit score servitude. They use their decent money to qualify for even larger loans that keep them working forever. These debts act like financial vampires, draining your potential for long-term growth and coast fire. While someone on $40,000 might live simply, the $70,000 earner is often drowning in payments. They have the nice house and the expensive watches, but zero actual liquid safety net behind them. This lack of a debt strategy turns your peak earning years into a desperate, never-ending hamster wheel. You reach the halftime of your career only to realize you have no real points on the board. Instead of building career capital, you are simply servicing the interest on your past consumer choices. It is a painful reality where earning more money actually increases your stress instead of reducing it. To break this cycle, you must stop viewing your salary as the ultimate measure of your worth. True wealth is the gap between what you earn and what you actually need to live well. If you do not master this gap now, even a six-figure salary will not be enough. We need to look at why higher earnings often lead to deeper holes without a solid plan. It is time to stop the bleeding and reclaim the power that your income should provide. Mastering your money at this level is the only way to ensure your future stays truly secure. What if you could stop saving for retirement at 40 and still retire a multimillionaire? This is the goal that changes everything, and the financial world calls it Coast Fire. Coast Fire is having enough invested that compound growth provides a comfortable retirement without further contributions. Can you imagine the massive weight lifting off your shoulders once the math takes over? Your fifth major financial goal is to have 5 times your annual expenses invested by age 40. It is like reaching the top of a massive hill and finally taking your feet off the pedals. At this stage, compound interest begins to do all the heavy lifting for your future self. Let's look at the numbers, starting with $500,000 invested in the market. If you let that money grow at 8% for 25 years, something magical happens. That initial investment balloons into over $3 million without you adding a single extra penny. By age 65, you have a comfortable retirement secured solely through the power of time. This strategy allows you to stop stressing about saving and start living your life today. You are no longer working for your money because your money is finally working for you. Achieving this milestone provides a level of psychological freedom that few people ever truly experience. After avoiding lifestyle creep and killing your vampire debt, this is your ultimate financial reward. 5 times your expenses is the magic number that turns your portfolio into a self-sustaining machine. Think about what you would do if you knew your future was already completely funded. You could change careers, work less, or focus entirely on the things that bring you joy. This is the superpower of compound growth acting as a silent partner in your success. No more sleepless nights wondering if you will ever be able to stop working for good. You are simply coasting toward a finish line that is already guaranteed by the math. This is the ultimate peak of your financial journey during the halftime of your life. It takes discipline to reach this milestone, but the freedom on the other side is priceless. You can now invest your energy into growing your career capital and pursuing your passions. Once you hit this number, the math takes over and you have finally won the game. We have covered the 9 decisions, so which version of you are we building today? Remember that fork in the road we discussed back at the start of this journey? One path leads to constant struggle, while the other opens a door to total financial freedom. 9 specific financial decisions separate those who thrive in their 40s from those who simply struggle. You have learned to defeat lifestyle creep by mastering the space between your own 2 ears. You have identified the vampire debt that was quietly draining your bank account every single month. You are finally breaking free from credit score servitude to reclaim your true financial power. By building career capital, you have turned your unique skills into an unstoppable income-generating machine. You now understand how reaching coast fire allows the math to take over your retirement. You are protecting your legacy by navigating the complexities of the 70-40th rule with confidence. This is your halftime, the critical moment where you decide exactly how the second half plays out. These 9 goals are the keys to a door that most people do not even know exists. The only question left is, will you pay the entry fee required for true freedom? Every choice you make from this moment forward either builds your fortress or weakens your foundation. What is your first move going to be as you step toward this new future? Financial peace is not an accident. It is the result of intentional decisions made right now. Imagine a life where options are plenty and the weight of debt is finally gone. These 9 decisions act as the ultimate entry fee for a life of options and peace. You have the map, the tools, and the knowledge to change your trajectory today. I am Nick, and I will see you in the next one for more insights.